And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, building expert advisors for MetaTrader 4, MetaTrader 5, and all those things that hopefully make us money. It is time for our weekly Forex Look Ahead for Sunday, April the 5th. So we're going to take a look at things and see if we can't get an idea of what the directions are going to be in this next week. It's going to be kind of difficult with the Iran war going on, and that's been the effects that it has had on the dollar and on the 10-year U.S. Treasury bond, which is pretty much what decides what the strength is on the currency. So we don't have any meters to look at. We don't have anything cool to look at today, like the risk on, risk off meter or anything like that, because nothing's trading right now. The markets are closed and they won't open up until later on tonight. So I do want to remind you that if you like this video, then hit the thumbs up button, and if you want to know when I put out more videos like this, then by all means subscribe to the channel, and you'll be notified by YouTube when I put out a new video. Also, what else? If you want to talk to me directly or have some comments on what's going on, then by all means, hit me up in the comment section and I'll get back to you as soon as I can. In the meantime, let's go ahead and take a look at it. This might be a shorter video than we're used to because there's not a whole lot of direction going on right now, except the obvious. The dollar's going up and will go up. Oil is going up and will go up as long as the Straits of Hormuz is tightened and threatens global oil supply. The United States does not get a lot of its oil from the Straits of Hormuz or Iran because the transportation costs are massive. That I do know from when I was a currency and commodities broker back in 2002, is that we get most of our oil from Canada and Venezuela. We probably get more from Venezuela now than we did last year, thanks to the regime change that has been put in place in Venezuela since then. So lots of global things going on. Did we do it for the oil? Probably. Oh well, enough about that. Let's go ahead and also the United States is a big oil producer, although it's not the kind of oil that we need. It's light sweet crude, which is different from the heavy crude that we manufacture other things with. So I'm not an oil expert, but I do know that that's part of the problem with the American oil is that it's the wrong kind of oil. But with that, we're not going to talk about that much longer. Let's go ahead and get into the risk disclosure, because you need to know about these risks when trading foreign exchange or futures. Futures have come back into vogue this year thanks to the 70s style economy we have. But I recommend options on futures, or with a big stop loss, because you can lose more than you invest with futures, whereas with options you can only lose what you have invested. With that, let's go ahead and get into that. I don't touch a whole lot on futures because I'm not currently a futures trader. It might be one day, maybe. There's some cool platforms I want to try out, like Apex trading. But at any rate, this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past, back in 2002 to 2004. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And the CFTC risk disclosure goes like this. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So let's see what's going on now. We have the sorry about yesterday's video, but I realized that I had double microphones working, and it gave it a very strange sound effect, so I took that video down. So here we have the US 10. Start here. The US 10 is going great. It is coming down. We like it when the US 10 is coming down. It does mean that money is flowing back into the US government as a safe haven, and it also lowers inflation for us here in the United States. The Japanese bonds, not so much. European, no, Japanese, yes. But the Japanese yields are going up, which means we could be setting the stage for a further, look at that, are going up, which could set the stage for a rate increase in Japan, which would start to take apart the carry trade, or at least that's the theory that's been in place for about 4 years now. That's how I lost a lot of money in 2002, was trading the unwinding of the carry trade that never happened. So with that, let's not consider that, because we don't want to try to catch falling knives here. We want to trade trends. Here is the DXY right now. It is undecided on Friday because markets were closed. Or all this week, as a matter of fact. That's I'm on the weekly charts. That is a doji right there, which means it could be indicating that we're going to have a big turnaround in the dollar, or in the DXY. And that would mean that we're going to have a big increase in the euro versus the dollar. I think I do have a trade in right now on the euro versus the dollar over the weekend. Oh, no, I don't. No, I don't. I've got buy stop positions, but none of them are actually in right now. I am running my Bollinger Band and RSI expert advisor on my MT4 account. I'm trying to get the MT5 version ready for test for live. Right now it's not testing well at all, because I'm also running it on 4 different currencies. So I may have to pull that into one currency. But at any rate, euro versus the pound. How did that finish? Euro's gaining ground on the pound. How about that? Again, that's just to gain bearings on which one is going to be the better of the two for dollar weakness to trade. And right now, it's the euro. It seems to be holding well at 115.15. Dollar versus the yen right here. Again, not a whole lot of new stuff to talk about here. It is going up and dancing with that 160 now level again, which could be an indication of Japanese intervention, which would drop it about 200 to 300 pips. We're still keeping our fingers crossed, holding our breath, and we'll see what happens on that. Again, you don't want to sell the USD yen for very long. You don't want to carry that for a long time, because you're going to be losing money on the interest rate deviation. Deviation, that sounds the right word. Difference. Pound versus the dollar. Look at that tumble. Coming down because of weakness on the pound, as indicated in the euro versus the pound. Coming down, and could be coming down to this level right here to 130.85. Right now it is kind of hovering at some support. Got a little bit of support there at 131.60. It closed at 131.93, so we could be finding support right there and bouncing back above the 132 level on USD weakness. I've been looking for USD weakness for quite some time now and haven't gotten it, so we'll see what happens with that. We're probably going to need to have some resolution with this war thing going on before we'll start seeing a weakness in the dollar. Pound versus the yen coming down nicely. Euro versus the yen kind of undecided. Not really sure what direction it's going to go in. It's a big consolidation there, big weekly consolidation for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks now. So it's going to put it all the way back to December when it started consolidating, and it's been consolidating all year long, and it's April. So we'll see when that's going to break out. Again, I don't trade the euro versus the yen very often, but it's might be time. Who knows? Dollar versus the Canadian. Canada is a big oil producer, so they're going to be somewhat resilient, but not against the U.S. dollar. They're bouncing up, and will be looks like they might be testing 140 soon, which is a big level for the dollar versus, or for the Canadian. Right there, 139.66 is the next resistance level, and so we'll see what happens there. We probably want to put a May 2025 weekly close thing right there, so we can keep an eye on that before we move back to the weekly high close. That's the May 2025 weekly high close. Not used to having the microphone in my face, but I have been running into sound issues lately, and I'm trying to correct them so we have better sound and better, and you can enjoy the video more. I'll enjoy making it more. It's kind of cool having a microphone in my face. Makes me feel like I'm being interviewed or something. Ooh, podcast coming soon. Who knows? Canadian versus the yen usually mimics the oil trade, but not this time, because look at the NYMEX going through the roof, and Canadian versus the yen is not going through the roof. So that's on Canada's weakness, weaker economy. They are running into some difficulties in Canada, especially with employment and keeping people working. So we'll see what happens with that. In the meantime, crude oil has taken off with the Straits of Hormuz closed, which predict raising prices of oil globally. I know it's $1.20, $1.10 more than here where I live, more than it was a few weeks ago. And I'm not fond of that. It's $30 only got me half a tank. At any rate, I'll have to put more money in there, I guess. Which is what inflation is all about. That's called inflation, and that takes money away from what I would be spending money on, like silver, and putting it in the gas tank for stuff to get to and from places. That is a layman's version of what inflation is and why it hurts. And no, it's politically you can take whatever side you want, but it's it's not as politically motivated as people think. It's more economics. And government does not run all of economics, by the way. That is a huge, huge misnomer these days. But at any rate, go to the dollar versus the Aussie right here. We have coming into support. Could see a bounce right there at 68.91. It'd be about time. We'd have to see some perking up of China's market. China's stuff, because China is Australia's biggest trading partner, so that could come into something cool. Was it to see a bounce right there? May get on the top side of that. Gold's perking up a little bit. 46.76 on the close. Not really. That is a very strong turnaround candle right there from last week. That dragonfly doji. So we are getting a little bit of a turnaround, but look how volatile that is. That's not something that the typical small trader can trade, because it's the whipsaws on this are nasty. I found out myself the whipsaw is trading silver, and I do not recommend it for small traders, because you can't do it. It'll wipe out your account before. It'll wipe out your prop trading account. It may not wipe your account if you've got large stop losses. Platinum, again, looking like it's perking up, coming up back up to 2,000. We'll see if we can cross the resistance at 2,000 and get back above that. Palladium, looking for convergence between all the metals and not getting it. We are getting it. That's the daily close. Palladium is right there and perking up also, trying to get above, it did hold above 150. So that's good. Yes, if you like palladium. Silver, one of my favorites. Look at that. Perking up a little bit more to 73. Again, look at the volatility here. If you're a small trader, you may not want to get into that, because you're going to be pretty much betting your entire account on that, especially with prop traders. You cannot maintain a 6% stop loss or a 3% stop loss while trading silver. You will get wiped out. You won't get wiped out. You'll lose the challenge, though. Let's see. IGV, looking at the software sector. Look at that perking up a little bit. Not really much to get anywhere above it, because it just fell below the 200 last week. Fell below the 200 day moving average. That is 200, right? Yep, sure is. And we'll see further cooling off of that, possibly, as the price of producing software has gotten cheap, very cheap. It peaked out last October at 2026, and now it's down 118, 180. We'll call that about 30%, which is well into bear market territory. Hotspots, look at that. Well into bear market territory. Stock price, it used to be 810, now it's 244. Sales, that's all I can say to that. Salesforce, right here. Stock price used to be 361, now it's 187. Youch. Intuit, another one. Used to be 786 on the stock price last July of 2025, and now it's coming all the way down to 420. That's nasty. That's almost a 50% drop. GoDaddy, look at that. Used to be 212, 213. Now it's 81. That's down a huge chunk, and coming down off of this, what I call the AI scare type thing. It's still going on, because it started way back here. Easter sale. Yeah, no, it's Easter. Oh, I forgot to say Happy Easter to everyone who's celebrating. But it started in October of 2023, and my business, my web development business, went away about. We went to Texas in April of 2023. About here is where my business went away. It's in about March of 2024, and I ended up getting into other things around July of 2024, and that's it. I had a web development business, was a web developer for about 12 years, and it completely wiped it out. Well, we'll call it more so like 7 years, because it's the first half was graphic design, which also got wiped out by technical advancements. So that's what's going on now with that, and that's why I'm doing this now, because Forex trading will never go away. Adobe, let's look at that. 635, that's a nasty fall too. Stock price was 635 at the high, now it's 242. Nvidia is not even struggling these days. Look at that. So the AI bubble may be popping, because there's no way that ChatGPT is going to be able to produce the revenue they need just off of their $20 and $20 subscriptions and $200 prescriptions per month. Subscriptions in order to fund the trillions of dollars that they say is necessary to advance to where they want to go to, which is kind of good, because we don't want them to get as advanced as far as much as they want to. That would now start me cheering for government, which would be weird for me. Let's look at Upwork. Ooh, look at that sharp decline on Upwork. Look at that. January 2026, the high was 2022, was $22. They've really never really gotten there. Well, yeah, they did. Back here during, was it COVID? Is that how far back we're going? Yeah, stock price was all the way up to 58 around 2021. And now it's trading at 10. So that's another 80% fall on stock. And if you watch the news, investment news, you'll watch directors selling left and right. So even the directors are getting out of it. So Upwork, we'll see if it survives. But that's really all I've got. I even included the software rundown again, because I enjoy watching it. I enjoy watching these company stocks fall. Not looking for a bottom. I'm not going to invest in them at all. I am customers for several of those companies. So I'm still a GoDaddy customer, I'm still an Adobe customer, I'm still an Intuit customer. So that is another reason why I keep an eye on those things, because I use those products. I also use a lot of open source stuff too, like Laravel. Highly recommend Laravel. But at any rate, if you like PHP and you like coding. If you don't do it. But that's all I've got for today for our weekly look ahead. Let's take a quick look at the something I didn't look at is the event risk, because I don't think we have that much coming up this week, because we had NFPs last week. So let's see what we've got this week. We have bank holidays all day today because it's Easter. And again, happy Easter to those who are celebrating. We celebrate in our own way. Next week, this week, apply settings. Let's see what we've got. OPEC meetings all day Sunday. How about that? Or all day today. They are not celebrating Easter. They are deciding the price of oil coming out of the Middle East. Yay. Great. If they cut back on production, that's going to suck. Let's see, dollar. Well, it's going to suck for everybody that gets oil from the Middle East. U.S. get some high impact stuff tomorrow with the ISM Services PMI report. I don't remember what ISM stands for, but it's services stands for Purchasing Managers Index. So we've got the rest of that. We've got core durable goods and durable goods coming up. And oh, look at that. ADP weekly employment change. That's weird. On Tuesday. We have the New Zealand cash rate. The New Zealand rate. We'll see what they're going to do. FOMC meeting minutes on Wednesday. Then down here we've got core PCE. Yay! We're going to see what the price of inflation. See what inflation is actually looking like with the Fed's favorite tool. And then we have final GDP coming out on Thursday, as well as unemployment claims. Look at that. Unemployment claims got a yellow envelope. An orange envelope, because it has largely been a nothing burger for several years. And here we have the... Our economy has changed since they started tracking that, and now people can break out an iPhone and create a business or I've watched people do that. Let's see here. We have a Canadian unemployment rate, and CPI for the United States coming out on Friday. So we've got a lot of events coming up. Should be a tantalizing week of trading. That again may not be, but we'll see what happens. See what happens this next week. And that is about all I've got. If you like this video, then by all means hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel, and we'll get to that. Let's look at Bitcoin real quick. Ooh, gross. Bitcoin, look down here, is a strong, oh, it's just a sell now, not a strong sell. Okay, so it's broken up a little bit. Oh well. Let's see, with that, oh yeah, also if you wanted to speak to me directly, then hit me up in the comments, and I'll get back with you as soon as I can. So in the meantime, you guys have a great one. Have a happy Easter, and I will talk to you later. Bye.